In this fourth part of the video on our project involving whitewater kayaks, we're going to take a look at how to do the payroll journal entry. And so there are twice that payroll is paid. This is called a semi-monthly period. And the first one is on the 15th, and that's the one that I'm going to take a look at. Now, there are 3 employees, including Joshua and Don, who are salespeople, and yourself, which you should change that name if you can, and put your name in there, and you are a office person. And so the check numbers are here, but these are checks that Mr. Ryan, your boss, he's actually writing out these checks. You're just putting in the journal entry, and that's it. He is running a separate payroll checking account. He's calculating out the employees and writing the checks, doing a bank reconciliation for that particular checking account. Now, he has that account separate, and it's not on the chart of accounts. So what we're going to do, I mentioned about putting that previous video or class about putting it to just adding that account, but instead we're going to use an account that's already there called wages payable. So let's take a look at how we're going to do this. So similar to the first project, you're going to use your gross wages here, the current earnings. We're going to use this FWT total, which is the employee's income tax payable. This FICA includes Social Security and Medicare, and there is an account called FICA payable on the chart of accounts. And we're going to use this net pay total, which is the amount that's actually going out to the employees. We're also going to be using the employer taxes, and that will be a separate journal entry. And we're going to have the entry where we write a check from the regular checking account that covers this. And so we're actually, since Mr. Ryan is keeping the payroll out separate away from the rest of the company, we're going to write the check out to him, and then he will deposit that amount. So we need to write a check out for $1926.48 to Mr. Ryan, and then he will take that and deposit it in wherever he has the payroll checking account. All right, so we're going to have 3 journal entries every time we have payroll. So the first journal entry are these totals that I just mentioned that have to go into wages expense and the liability accounts, and we're going to credit for this 1926 wages payable, a liability account that we owe out that 1926. Then we'll have a second entry where we're going to debit wages payable and credit cash when we write out the check to Mr. Ryan to cover that 1926 that's being paid out of this other payroll checking account. And finally, we have the third entry in which we are covering the employer costs, where the employer has to match the FICA and also pay FUTA and SUTA. All right, so let's take a look at actually doing that. First of all, we have to be able to separate this out for the wages expense. So Joshua is $998.80, and Don is $942.48, and so that's a total of $1941.28. $1941.28. So we're going to go on to our general journal. Put in our date. We're going to debit wages, expense, dash, sales, and that is for the 1941.28. Now we also have the wages for you, which you are the office wages, and so that's $396. So we're going to debit wages, expense, dash, office for the $396. Now we're going to credit the employee's income tax payable, and that is the amount that's taken out for federal withholding tax. So the FWT stands for federal withholding tax. Sometimes you'll see FIT, federal income tax. And the account in our chart of accounts is called employees' income tax. All means the same thing. Okay, and so this $232 is how much was withheld for employees' income tax. And we're going to have to, we've taken it out of the employees' checks, but it's not ours to keep. We're going to have to hand that over to the IRS on the 15th of next month. Now we have the FICA tax payable account, and that includes the fact that we took Social Security and Medicare taxes out of the employee. Together, Social Security and Medicare taxes are called FICA taxes. So we took $178.80 out of the employee. Once again, we don't get to keep that. We owe that to the IRS on the 15th of next month as well. So $178.80 is going to go into a liability account called FICA payable. Now, if we were actually paying these checks out of the regular checking account, we would credit cash for the net pay. But these are coming out of these out of this payroll checking account that's somewhere else outside of the company. And so what we're going to do is credit wages payable for the total of the net pay, which is $1926.48. Okay, I'm going to take a look and see if my debits equal my credits. So I just added my debits up. That's 233,728. Now I'm going to add up my credits. And that also equals 233,728. My debits equal my credits. So then I can put my explanation, and you can say per payroll register of 7/15. Okay, now I have my second journal entry, happens the same day, and this is where I'm actually paying the check out to Mr. Ryan to take care of this $1926.48. And so I'm going to debit wages payable, because I'm decreasing that liability by 1926.48, and I'm crediting cash for the 1926.48. Now, you will notice when you're going through your journalizing that check number 1762 is missing. There is no check number 1762. That's because it is used right here. So we're going to put in check 1762. And of course, since that is a check being written, you're going to want to put that in the check register also, that we wrote a check out to Mr. Ryan for 1926.48. You could put this, since it's writing a check out, you could put this in the cash payments journal and have a column that says wages payable debit, and you could do it that way if you want to. Or you can keep it here in the general journal so that all the payroll entries are all here together, if that floats your boat. Okay, either way is fine. All right, our third journal entry that we have to do for payroll is the employer costs. So we have an account called payroll tax expense, and this represents the expense that the employer has to pull out of their own pocket. They have to match the FICA tax payable. That was $178.80. So you'll notice we have an increase in a liability for $178.80 up here, and again down here. That's this $178.80 up here is the money we took out of the employee. The employee is actually paying that amount. We're just keeping it and sending it on to the IRS. It's not our money. Okay? But this $178.80 down here is actually where the employer is paying out of their own pocket an additional $178.80 to cover Social Security and Medicare for the employees. So two amounts, 2 times $178.80 ends up getting put in on the 15th of next month. The employer also has to pay FUTA and SUTA. Those are unemployment taxes, and they're responsible for those as well. Now the FUTA is $3.17. So we owe that out to the IRS, and the employer owes SUTA, that's the state unemployment, and that is $21.38. And that will have to be paid out by the 15th. That'll have to be paid out at the end of the quarter. So this July is in the 3rd quarter. And so at the end of September, the employer will have to pay out the state unemployment tax. If this was in South Carolina, that'd be the South Carolina Employment Workforce and Agency. And so they're the ones that take care of paying out state unemployment benefits. Okay, so now we need to say, well, how much goes in this debit into payroll tax expense? So we're going to add all of our credits, $178.80 and $317 and $21.30.